This can actually be it. This can be the decent relief rally that we've been waiting for. I told you back on the 14th of February that this is the relief rally that is going to happen since October for the first time. Local bottom is in. Market seems to be bouncing here. We seemingly have that actual rally. Yesterday on the show, I explained to you why I believe that we still need to get that push towards the $75,000, $78,000. That push is actually happening now. Now, this is the moment when a lot of people say, oh, but 𝗏𝗏 is so exotic. I'm going to go apeshit all in 100x leverage. Don't. Wait for this show. There are a lot of things to talk about, but yes, it does look good, and this could potentially be the rally that we have been waiting for. If you don't know who I am, my name is 𝗏𝗏. I bring these updates 5 to 10 minutes every single day. Be here since 2016. You can look at all the shows 5 minutes, 10 minutes. If you don't have that time, please leave now. But if you do, subscribe to the channel because 22% of you are not subscribed. So be the part of the 80%. Smash the subscribe button. Let's get going. Couple of things. I told you throughout, all these updates. If you've been here, and you have most likely participated in these long positions. I told you that I have my long open. This was down 2.5 grand yesterday. Now we're up almost 5,000. This is on Bitfunded the way I explained to you that is happening. And for the first time, we see that Bitcoin is acting like safe haven. So you can look at NASDAQ, you can look at the S&P, you can look at gold, all down, except DXY and Bitcoin, which is obviously the TA showed it to us and we talked about this, but it's good to see that finally something is happening. While the stock market is completely getting hammered around the globe, South Korea 8% down, it actually closed down 11%. You get Japan -6, South Africa -6, Germany -5, Spain, Italy, United Kingdom, France, all of them down. Everything is down. At the same time, the S&P, all the categories are down. It's rarely that you see this where every single category is down in the red. That means that the market doesn't know what the hell is happening. No wonder Dubai is being bombed. The US embassy, the US consulate in Dubai has been bombed as a retaliatory Iranian drone attack in Dubai on US military bases and consulate. Now, we talk about the charts, and that's what I do, and this is what we're going to do now as well. But I just want to bring this here because these are super important things to the market. One of them is that Spain came out and they said that they are not going to help the US or support US to use their military bases located in Spain to get involved in the attack to Iran. Now, you called me an idiot when Trump came out with this speech and he said, look, we're going to be there for NATO, but I just don't know if NATO is going to be there for us. It happened a couple of weeks ago at World Economic Forum. And suddenly you see this, Spain is a NATO ally. Now you see Spain is coming out and making this stupid mistake while they don't allow the US to use their own military bases in Spain. Trump comes out and it says Spain is going to be not doing any more business with the United States. I think, Spain is making a massive mistake here. You can't really do that. We'll see how that turns out, especially towards Europe. We'll see what Spain can do or what stir up. But the reason why we see a little bit of risk off here is not only because the structure was good, we talked about this yesterday, but because there is news coming out which basically shows that the US seemingly is winning this conflict, this war. So what happened is that they confirmed that they launched B-52 Stratofortress bombers, which are these big ass planes. Now the difference between these and the B-1s that they sent previously is that the B-1s are supersonic bombers, and the B-1s are not stealth, but the B-2 are stealth, meaning the B-1s are extremely fast. The B-2s are very stealth, meaning raiders can see, but the B-52s can carry insane amount of load. That means they are much more effective in flying once and bombing everything, but they are a massive target. So the only way that they actually send that, and what this actually means, the only time when they send this is when there's nothing left to bomb them or there is nothing left to shoot them down. You send B-52s when there is nothing left to shoot them down. So the fact that the US is sending these aircrafts, signaling the market that they are actually, so to say, winning this conflict, winning this war, achieving their target, and that is a signal for the markets to actually have a little bit of a rally here, whether that's for the stock market or for crypto. So I do think that we're going to have a little bit of a relief rally here. Now, obviously, talking about Spain, talking about Iran, talking about the Hormuz, it's not done, and this is why yesterday's show that I said that I made these are designs you have to come back every day. If you're not subscribed, do that and come back every day. Spend 10 minutes on this. I promise you it's worth the time. Comment below if you think it's worth the time, and you can read the comments if you're new, okay? But ultimately, I said I have to reconsider my Bitcoin long position. And the reason why I made this video is, and I explained to you very well in this, 9 minutes, 10 minutes, is that I am not budging because I explained to you why I took this. I know the risk I'm taking on Bitfunded. It cost me $1,000 to get $250,000 accounts, or 150 and 150 because we get this deal going. I buy my own accounts as well. And so I know the risk that I'm taking. For $500 risk, I'm getting to gain, if we go to 78,000, $150,000 account. It's a literally no-brainer. So I'm not budging. But I told you yesterday when we were up at break even that things are escalating. A liquidity zone is building up. There can be a flush coming. Now, I said I'm not budging because I just can't go against my TA, even though the world is burning down. I can't go against it, but it doesn't mean that this is the right thing to do. Now, going back to this today, if I look at this, obviously so far it seems like that my decision was the right decision, because if you look at the 15, let me actually show you on Bitcoin because it's easier to understand. If you look at the market here, I've been telling you, again, you can just scroll back. If you have been here, well, it's awesome. If you haven't, well, it's worth scrolling back. I've been talking about this for the past 2 weeks. Nothing shows this better than my post saying the local bottom's in on the 14th of February. Now, the 14th of February is important because it happens straight after. It happens straight after the retrace, after the 50% market structure shift. So look at this, 50% retrace. You have a 15-minute market structure shift, a pull. Here I said we're gonna have a retrace to 50. This is the 14th of February. When we made this hourly higher high here, when there was an hourly higher high made here, that's when I made the post and I said the local bottom is in down here. Why? Because not only we had a very impulsive push, a 50% retrace, an hourly higher high, but also we have liquidity building up all the way. So, and I said the 60,000 bottom should be in. So far, the 60,000 bottom is in, and so far the trade holds. That means that we had an hourly market structure shift here. This got faked out, this is also with the conflict. So this low got violated, which again is just a liquidity sweep. And then slowly but surely, there was another hourly and 4-hour market structure shift, then came back on the conflict again, and then started moving. I do believe that the next target is going to be $75,000. And the reason is super simple. If you look at the market and if you look at the previous retraces, markets always retrace 50%. So you can see here, you pull from the top. What does it do? It has a 50% retrace and a continuation down. What else does it do? You put the Fibonacci onto the top, you put it onto the next leg down. What happens? 50% retrace and move on. What do you do then? You put the Fibonacci on the top, you pull it to the bottom, you got a 50% retrace and you move on. So there's like a lot of reasons to believe that the next thing is that there is going to be a retrace to the 50%, which is currently sitting at 75,500. And once that happens, there will most likely be another leg down to sub 60, about $50,000. We will see. I don't know. But one thing is certain, that we need to see a retrace to the premium zone, which is basically on the daily leg up here. This level caused the major dump that took liquidity here as well. Therefore, this level is at 86,000. Beginning all the way up here, by the way, just so you know, and still be extremely bearish. So this up here is the premium. You always buy in discount, which is down here, and you always sell in premium. My target is 78,000. And that's what I have set on the account as well as TP. When that hits, I'm going to get the $150,000 account. I, by the way, explained this in a video. You can just watch this video if you missed that. You might be a little bit late for this trade, but if you come back and you participate, then you will be able to see it. Say the next one. But ultimately what I'm thinking is that if you pull it on the weekly, then this here should be the major level. And if I look at the weekly leg, the weekly equilibrium is 79,245. That means there is a very reasonable possibility for the market to get up here. Now, why do I say that you might be a little bit late? It does make sense to long here. I'm telling you, it does. What? Your stop loss is going to be a little bit higher, right? Your stop loss is going to be a 16% because you have to keep the 60K anyway. But a couple of things. One, if the market was to break below 66,000, I do think the probability of this going back up to the 75,000 and me being right is diminishing. Why? Because this is a very strong level down here. This level was responsible for creating a new high. So yes, the ultimate level is this 62,000. So this has to break before we go sub 60. But if there was a close below on the 1 hour chart below 66,000, I would be concerned and I would consider closing the positions. Of course, I'm going to let you know in the community. If you're not in the community, it's free. It's top of the pinned comment, but also it's going to be in the description. So go and join in there. I will always update you when something is happening. But if that doesn't happen, you know, it does make sense to take this. You can also take a long position like this. You know, again, considering all the factors that we see, this can get stopped. But if you understand the risk you're taking, I do think it makes complete sense to do so. Again, I have a full video, but the TLDR on this is that we have this deal. I pay my own deals. You know, I buy my own deals as well. I don't get them for free. So I buy these accounts as well. And what I do is that I buy a $150,000 account and I get a $100,000 account, meaning a $150,000 account bit funded costs me a challenge, costs me about $1,300. So that means that I get 2 accounts for about $700, $800, $600, $700. So that means that if I get stopped on this position, then I'm losing $600, $700, which would be my stop loss. You can do this with smaller accounts as well, by the way. But if I win, I get this account unlocked, and then it's set. Then I can make 1% profit and make $1,500. It's ridiculous. It's ridiculous. So anyway, this I do. I don't have another one. If we get a pullback here, I will update you in the community, and I might get myself another account, and I might actually trade this. I'll let you know when that happens. Ultimately, I'm just waiting for higher. Nothing changed. Come back tomorrow, join in the community, and check out this video, which will explain to you much more why I took the trade in February. I'll see you in the next one. Take care. Bye-bye.